Hey guys, King of Homes, Stephen King with Realty Connect USA, here to give you an explanation on the differences between conventional, SONYMA FHA, and VA loans. Many of you may have heard of these financing terms before, but have no clue what they mean or how they affect you when purchasing a home. We're going to be breaking it down, that way you can better understand your options. So let's start with conventional financing. You have a buyer and a bank, and that's it. This is the cleanest type of financing there is without it being an all-cash deal. Conventional financing is not only the quickest and simplest mortgage, but it is the most lenient when it comes to the condition of the property you're purchasing and whether or not that property has all the proper COs. So if you're purchasing a home perhaps with a finished basement, or let's say a seller added an additional bathroom here, an extra bathroom there, without getting the proper permits for the improvements they made, and you as the buyer are okay with these COs missing, most conventional lenders will not care about it either, and they will issue you a loan without hesitation. Sellers prefer this financing because there are less hoops for the buyer to jump through, and there are less restrictions for the house itself, which makes the loan process cleaner and creates less of a chance for a problem to surface and perhaps kill a deal. And this is why sellers prefer to accept offers with conventional financing. Next, you have what's called FHA or SONYMA loans. Basically, these loans, you have a buyer, a bank, and then a government entity overseeing the whole process. SONYMA is a loan backed by the state of New York, whereas FHA is a loan backed by the federal government. These two programs I find are most synonymous with first-time home buyers. The reason being is they can be more forgiving when it comes to buyer qualifications because they're backed by government entities. So if you're carrying higher debts, have a lower credit score, maybe less cash to work with, or you're new in your career and your income isn't as high just yet, these programs are designed to help assist buyers who may be just starting out. They can also be great for buyers by providing down payment assistance. Guys, these are great loan products. I have many buyers who take advantage of what these loans offer them. They can be very forgiving in how they qualify a buyer. However, it does come with some trade-offs. Now, majority of the risk in these loans lie on whether or not the property you're purchasing qualifies. So here, not only does the buyer have to qualify, but the property has to be in the condition that that government entity wants it to be in, otherwise they will not lend money on it. So for example, these loans will require that the homeowner obtain any missing COs, install handrails on stairs, porches, decks, along with other requirements that these government entities feel necessary. When an appraiser comes in on an FHA or SONYMA loan, they're looking to make sure that the house is up to the government's standard. If the house is run down, there may be paint repair requirements, roof repair requirements, along with a couple of other things that they may point out. And these can potentially create higher expenses, make for a longer sales process, and ultimately pose more risk to a seller than a buyer. Now, with that being said, these programs can make home ownership much more obtainable for first-time home buyers, and they're great programs for buyers who are just starting out. The key to making sure you don't waste time on a property that won't qualify for FHA or SONYMA financing is relying on your realtor to know what to look for. Last but not least, you have your VA loans. And if you are a veteran or active duty, thank you for your service. A VA loan is another loan program where you have a buyer, a bank, and a government entity setting the requirements. Now, these loans are designed to allow veterans and service families to purchase real estate with no money down and no PMI. They may also allow the buyer to borrow additional money against the home as well. These loans do incredible things for the men and women who serve to protect our country. The key thing to keep in mind when factoring the risks is that the loan process and order of operations for these loans are slightly different than others. Similar to FHA and SONYMA requirements, but the appraisal is done much later in the deal, which means if there is going to be an appraisal issue, you may be waiting a little bit longer to find that out. So the process of finalizing these mortgages can take slightly longer, but I find that the key to these loans is having a lender and loan officer whom are both experienced in issuing these loans. This is another program that can be a great option for the borrower, so make sure you have a realtor you can rely on to guide you through the process. So if you have any questions about any of these programs, or you're looking to learn whether or not you qualify, or if so, how much for, and if not, what you need to be doing to put yourself in the position to purchase, give me a call. I will make sure you speak to the best banker for your situation. My bankers will make sure that you are preparing properly. If you think you are a year or so away from purchasing, right now is the time to speak with a banker and start preparing. The last thing you want to do is work diligently for a year, preparing your finances, only to find out that you prepared them the wrong way. Investing 15 minutes in speaking with a banker can ensure you're preparing the right way and can save you a year's worth of time. So I'm the King of Homes, and reach out anytime you'd like to learn more about this real estate stuff.